big day for the markets, and we have a grand panel with us now to discuss markets. Rahul Arora, CEO at Nirmal Institutional Equities, Devina Mehra, founder, chairperson and MD at First Global, and in a bit Saurabh will also be joining us. Rahul, let me first attend to Devina since she's waiting by for us. Devina, is the budget really going to move the needle much? A lot of people so far have told us that so long as they don't do anything terrible like short-term capital gains on equities going to the marginal rate, we are cool. We don't have too much of expectation. Is that fair?
I think that's fair, and budget should not have too much to do with the markets. I mean, nowhere in the world is budget such a big event, at least as far as the markets are concerned. It is, and as we evolve as an economy, I don't think it should be a huge event for us also. And on capital gain side, what I expect from what finance ministry officials have been saying on your channel also through the year, that maybe there might be some rationalization because on capital gains, different assets have different rates, different holding periods, different indexation benefits. So there might be some rationalization on that. But my expectations on the budget are more on the policy side rather than on the taxation side.
Okay, so we'll come back to that. We have Rahul Arora here in the studio, and he's celebrating his birthday with us today. Rahul, happy birthday.
Thank you.
Big day for the economy, big day for you as well. Are you having high expectations from the budget this time? Or as Devina was saying, it's just a financial statement at the end of the day and not going to move the needle of the market too much?
Well, as long as it gets me a glass of scotch at the end of the day, I'm all right. No, but on a serious note, I think I agree with what Devina has said. I think beyond what has been discussed, I think the only thing would be not too much of a slippage on the fisc. I think we're working with about 6.2%, between 6 to 6.2. I think the math credibly adds up there at that point. I think beyond that, I think the one thing I'd want to hear...
You're expecting 6.2?
We are at...
the economists will disown you, but anyway, go ahead.
No, so I think, Lata, you've seen the subsidies that they've had to give for petroleum and fertilizer. So I think even they may actually announce a number around 5.8, 5.9, but I think as the year goes on, you're in a pre-election year. I think towards the back end of the year, there might be a little bit more. I think at 6.2, you're looking at a 7.3% 10-year. I think that should not upset the cart too much. I think it'll fit into the RBI's mathematics.
6.2, I think it'll be more than 7.3. Because it's 7.3 now on expectations of a 5.8 fiscal deficit. If it comes at 6.2, my sense is, even now, it went up to 7.39 yesterday, the 10-year. But anyway, be that as it may, your expectation is that even 6.2, the equity markets will...
I don't think so, Lata. I think, the one thing we also have to keep in mind is that government capex has not been that strong this year, right? In the reported numbers by the Government of India itself, the period of April to November, capex is down about 76%, and at the state level, it's equally bad. I think it's only private sector capex for this period from April to November that's up. So I think as the year goes on and the government has to invest in capital expenditure, obviously that will be another added over and above what they do on the subsidy. So I think somewhere between 6.2 should be the number that we work with, even if they announce something on the lower side. Beyond that, I think it's a little bit of tinkering on income taxes. I think, if there is a lot of talk about, at the higher end of income tax, there's such an anomaly with respect to corporate taxes. And at the bottom end, can you do a little bit more relief that can probably help consumption? But all things considered, I think, this government there's one thing that they've done is they've kind of rendered the budget ineffective because of these PLI schemes. And there are a lot of announcements during the year as well. So I think the more important thing will be what the Fed says tonight and what the RBI says next week. And I think that has the potential to either take the Nifty to 17,000 or back to 18. I think let me summarize it this way. No negative news will be good news today.
Okay, I just want to say the government has done very well on capex, central government. States have fallen way behind. They've barely done 38% of what was allotted. But centers more or less kept, April to November. I didn't see the April to December numbers. April to November, about 68% of full year budget had been spent, which was quite decent. Devina, you said you will worry more about policies. What did you mean by that in the budget?
No, I didn't say I would worry. I said my focus would be more on policies, because that is where I think the government's focus should be, which is the long-term issues in the economy. And there are especially three that to me are important: employment, education, and health. Because employment is what worries me, because we all talk of this demographic dividend for India, but really for the demographic dividend to pay off, there are three components. One is, of course, that you have a large proportion of your population in the working age, which is like you have a lot of young people. But the second part is that how many of the young people are employed, and the third part is the productivity part. So we have the first, and we have it only for a limited number of years. As you know, China's population has actually started to decline, and even for India, the people in the working age will start to decline after some years. So you have it for a limited period of time. But if you're not able to employ those people, then you have a problem, because that's also the driver for the economy, because when the people are employed, they obviously consume and so on. So even before the pandemic, we were at a 40-year low in unemployment. Now there has been a little bit of decline in unemployment, but that's mostly come from agriculture, which is really disguised unemployment, because for the economy to grow, people have to move out of agriculture, not into agriculture. If you look at the Narendra numbers, yes, if you look at the economic survey, there has been a decline from the previous year of people. But if you go back to 2018 or 19, we are still at a higher level. You know that 80 crore people require free rations. So that all shows that consumption cannot be broad-based. I mean, if you look at all the industry numbers also, the higher-end cars and SUVs selling, two-wheelers still in the doldrums, all that shows that you need to do something for the wider economy. Education particularly took a hit with the pandemic, with children being out of school. So those are the things, and because unless you invest in education and health, the next lot of people are not going to be employable.
Got it. The lower part of the K, basically.
Yeah. All right. That's absolutely correct. Sonia, by the way, this entire question which we're asking, is the budget important or not?
Yeah.
I decided to ask ChatGPT.
What was the answer?
It's a long answer. I don't know if you want to hear the whole of it, but short answer is yes, it is important for, it's
Did
anyway.
you really need to ask ChatGPT that question?
I ask ChatGPT everything nowadays.
For your own redundancy, don't do that.
You've automated your own work.
Just for fun. Saurabh Mukherjea is with us as well. Saurabh, hi. Good to have you with us here in the studios.
I think a few years from now, you won't need us anymore. ChatGPT.
Although it doesn't have information beyond 2021, I guess that's a matter of time, right? So
maybe in a few years it will, right? The next version of ChatGPT.
How are things looking, Saurabh? I know your view on the budget. I mean, we've had you on budget days. It's a one day and doesn't really change the course one way or the other, but fundamentally underlying how things looking to you.
I think, look, I mean, in the normal course of circumstances, I would have said, as I've said this time as well, that given that we are a free market economy, the importance of the budget gradually diminishes. But I think there comes a juncture every few years in India where blue collar unemployment is in such bad shape that you do expect the budget to do a little bit on that front. So I don't think I've seen people earning 2 lakhs and less in this bad a shape in the last decade or so. And that data comes through every result season. We see the same story. I think real wage growth has been negative for 3 or 4 years now. So given that there's an election around the corner, 15 months away, I presume it is now or never for blue-collar wages and blue-collar employment. And that has a significant impact on many of the stocks that we hold. So from that regard, if you ask me, my one-point agenda on the budget today is to see what can the government do to change the narrative around mass employment and rural wages.
There's a point of view that they can postpone that to the fourth quarter of the current year. That, this can be one of those disciplined fiscal deficit budgets, capex oriented. And the vote on account plus the fourth quarter, out of the budget announcements can take care of the political issues. You don't buy that?
I reckon this budget will be a tight budget. I think to give the government credit, paradoxically, they have been fiscally tight-fisted by and large, right? And I doubt, given that tax buoyancy is decent, the economic growth story is all right. I think the economic survey, I think the CEA is correct. I mean, we are at a healthy state. I think they'll be tight-fisted on the budget. And I think, Latha, that does mean that the whole challenge around mass employment and rural wages, I think, continues. If it doesn't, I'll be very pleasantly surprised. But my going-in expectation is we've basically set a template very similar to, I would say, Thatcher and Reagan. Tight budgets, fiscal conservatism, and then push the free market to do what it can, which is all right for people in our strata of society.
But not.
The budget can sort of reallocate, right? Meet the fiscal deficit targets, etc. but use funds from somewhere else. So maybe
I agree with you, it can. So capex growth has been, government capex has been growing at 30%. If they throttle that up to 15% and switch some of that to social security spends, I would be happy to see that. But I suspect that's not going to happen. I think this government has very clearly laid out its agenda in the last 2 to 3 years. It's actually quite remarkable. I think Nirmala Sitharaman's thinking, the government's thinking on economics has become far clearer in the last 2 to 3 years, which is clear that we will spend on capex, but other than emergency spends for the poor,
or raise taxes, Saurabh.
I doubt, given tax buoyancy is solid, Prashant, going into an election, I think that'll be tough.
No, I'm saying stock market tax.
It's not going to bring in a huge amount. I mean, they might or might not do that, but that's not going to move the needle.
The number was chunky last year, right? 80,000 crores. And markets they've not done well over the last
exactly.
1 year.
So I think that's where the circularity lies. If you have a bull market, you make money on capital gains tax, whether you charge at 10 or 15%, it doesn't matter. But if you hike capital gains tax in what's been a flat stock market, it's sort of very difficult to make money. Remember, they also have to push disinvestment, which makes it hard. If you're hiking CGT and then pushing disinvestment, it's a little contradictory.
Actually, we were talking to Sonal Verma of Nomura a while back, and she said that growth is expected to slow down materially in the second half of the year, not just because of the developed market recession, but also because of the lagged impact of the tight monetary policy. So given that context that we're heading into the budget with, any other growth avenues that you think the government can eke out? Saurabh, first to you and then Rahul.
So look, I think the one thing I'd be, wherever I've had a chance, I've encouraged them to do is, I've never seen public sector banks in this sort of shape. This looks to me a golden opportunity to privatize a couple of public sector banks. That's one of the easier privatizations to do in India compared to, say, trying to sell, say, a shipping corporation of India or some other metals and mining PSU. So you've got banking system in the best shape in 10 years, PSU banks, time to press the button. If they could monetize a couple of large PSUs in the next 12 months, that would give them money, do some welfare spending, good for their election prospects and so on.
Okay, what about you, Rahul? Anything else that you're looking at where the government can spur growth?
So I agree with the point Saurabh made. I think, if you track one company, which is V-Mart Retail, they're almost 75% of their stores are in UP, Bihar and Jharkhand. And if you speak to the chairman, he'll tell you volumes are down 30-40% as of December end. So I completely echo the sentiment that, at the bottom of the strata, things are extremely difficult and, you need to do whatever you can. And I think the only way to do that is either you announce more projects and have people working on them and give them wages, or you give them any sort of incentive that you can on taxation. I don't think there's a third way to actually put money. I think, doing a direct benefit transfer or anything like that is just going to make our economy more ineffective. Just on a lighter note from what Saurabh said, I think instead of privatization, because the RBI did not, give that much dividend last year to the government of India at 40,000 crores, they may actually take more dividend out of the PSU banks this time around as opposed to, privatizing them. That's just, I agree with the school of thought, but my sense is probably, if you look at the UP elections as a barometer and the kind of projects that were announced, I think this is going to be a very, very heavy on infrastructure budget. And as a second order beneficiary, whatever it takes to make that infrastructure, which is cement or whatever, could be another avenue. And the third is obviously the people who are going to work these projects and the income that they get. I think the point both Devina and Saurabh made is very important on the bottom of the society, because I think one thing people miss is the way people in urban India and rural India consume is very different. The velocity of consumption in rural India is much higher. Typically when we go to the malls or something and we want to buy, for example, a Colgate, right? We'd probably buy 3-4 tubes. That guy will just buy as much as he needs, which is why you'd find, people like Lever, Britannia, Daawat talking so much about velocity of consumption in rural India. So either you give them jobs or you give them tax breaks. I'm not a proponent of, putting money in the hands directly. It's a very ineffective way to run your economy. But all things said, I think this is going to be an infrastructure-heavy budget. And I think there will be second and third order beneficiaries through cement and consumption down the road.
I just have a question, Lata. Saurabh, if the budget, so if they do something for the bottom of the pyramid, great, as I think all of you are saying. If they don't, as investors, will you respond in terms of
how you buy,
changing your portfolio around, reducing your exposure to that segment of the population? Or are you already doing that?
Yeah, so I think it's a good point. So I think as you might know, we've exited Relaxo, right? So if I took Relaxo's sandals business was actually doing just fine. The chappals business had been absolutely decimated, right? They had made a few missteps, but to be fair to Relaxo, the 80-100 rupees chappal hammering, a big part of it was the fact that that rural wage growth has been negative now for 3 years. So if you're selling chappals to low-income people and rural wage growth is negative, even an 80 rupees chappal becomes hard to afford. So we already in a way sort of preempted the budget. I wish they did more for the bottom of the pyramid, but I think I agree with everybody. It's more likely to be capex heavy, and I think the NDA has set out its stall on economics very clearly in the last 3 years, that this is more a Thatcher-Reagan type economics.
Devina, you stay out of India and you look at a whole lot of markets. So, is there more to go in this pro-China, away from India story? And has the Adani story, made any difference to people approaching India?
Okay, I think Devina can't hear you, so we'll try and just get back to her.
Yeah. I mean, I had a call in. Yeah, please. No, I can hear you. So you were talking about
India in the
part of
pecking
it,
order
actually.
and whether Adani story is changing it.
Okay, so I mean, as I've said plenty of times on your channel, I don't think it's a good idea to track FII flows and see where it's going, because that ultimately, if you just plot it from the time FIIs came in, it has really no correlation with the markets. So that remains. I don't think the Adani story ultimately, which is what I said even before the FPO went through, I think the reaction here itself was overdone, and I did not see.
Okay, I think we're having some issue with your audio, so we'll come back to you, Devina. But thanks a lot, gentlemen, for joining us. And of course, we will keep you updated on what happens with the budget, and you will, of course, watch it on our channel.